Good morning, everybody. It's Thursday, September 23rd. It's going to run through the morning charts here real quick. More or less, we've got support over the previous day, a couple past days, the lows here, and we've got resistance up near yesterday's high. Right now, we're trading right between that range and testing support. If we break that level, I think we're most likely going to fall somewhere right through the middle of this noise here, somewhere down to the 1275s, 1280 area, and I'll just show you that on the intraday chart. Now if we take a look here, this is a 60-minute chart. I mentioned the other day that we had this quick pop on the news. We formed somewhat of a little bull flag, and then we had this kind of grind higher with upper wicks indicating somebody up there keeps selling and pushing it back down. It is an intraday pattern, and I did mention that it is bearish, but because it is an intraday pattern, it doesn't have a huge move potential to it. A lot of times it will fall back to about the halfway mark of the bull flag. Anyways, it has broken down, and it formed a bear flag and started to roll over this morning. And just a couple minutes ago, gold just started to get bought back up here, but it was starting to hang pretty low. And this pattern still looks somewhat bearish in the short term, but I think it could pull back to the 1280, 1275, which is right through the middle of this noise, which is where the average contracts were purchased for gold. So that's going to be the main support area. But from there, it could easily just continue to go higher. I don't want to try and pick a top in gold in this market right now. Everything's kind of getting a little out of hand and moving out of their norms. So I'd rather wait for a strong correction and then take a long position there. Now you can see here we are trading above this resistance trend line, and we have yet to confirm. We had the pierce there the one day, and then yesterday we saw it almost close above it, and because it didn't, we haven't got confirmation that this is a clear breakout yet. So today's candle will have to still clear the yesterday's candle and close above the high in order to confirm that it's there's a breakout there. But if we do get a reversal here, we're going to see selling, waves of selling, stop orders getting triggered everywhere on the way down. Is going to cause a waterfall effect if we do get it. So every pivot low, we're going to see there's going to be stops placed just below it. So once those stops get triggered, it's going to flush it, and the market will drop to the next key spot where there'll be stops. And of course, if this level is broken, those stops will be triggered. There's another level here, another level here, another level right here. So as it starts to drop, it could simply keep bouncing on these and continue lower. Because there's three of them really close together here, once one triggers, it'll trigger the next run a bunch of stops, and then trigger the next bunch, and then trigger this. And the selling will happen so quick that there won't be enough buyers. It'll be a very sharp drop, and it could pull it all the way down. It would probably somewhere down into, I guess, yeah, the 12 area here. Probably test somewhere in there. Could actually pierce it and then close back up. That's kind of what I'm thinking, but I don't really want to try and pick a top yet unless I find a really clear intraday pattern that lasts over a couple days and shows some good potential. But other than that, right now gold's still in a strong uptrend. It's just grinding its way higher, and I don't want to get involved in trying to short that. So let me just pull up the US dollar here real quick. Here's the US dollar, and this is a 15-minute chart. So this is yesterday's range right here, and it sold down yesterday pretty good. This morning we're starting, it did come down yesterday and test the top of a gap window, bounced off that, and this morning we're starting to get a bit of a move up. That move up is actually putting pressure on crude oil. Here's the crude oil chart. This is the daily chart. So this morning, since the US dollar's gone up, crude oil's dropped down to 73.80, which is a pretty good little drop. Yeah, we're still trading within this more or less bear flag that has formed on the daily chart of crude oil. Of course, if we get a clean breakdown today and it closes below this support line here, we might see a good test at least to these lows here around the 71 area, and if it breaks that, I would think we'd come down to this level over here, and then ultimately down to these lows around 68. So we'll have to see how that plays out, and hopefully we'll find a low risk setup for that. As for the SP 500, here's the daily chart, and you can see Yesterday we had it was the second pull down, pullback, and this morning futures have sold off pretty good. They're trading at 11.1950, and they've broken the 5-day moving average, which is a pretty key level, usually to be broken. Right now it's trading at support at on a couple different levels. We've got support, horizontal support from the previous high, which was also a cluster here, so that'll act as support. We're also at the 10-day moving average, which will act as support. So, and not only that, but we're trading within one long candle here. So to have a big bullish candle and then 3 inside candles, it is possible that we still get another big candle up to take that out. So we're not in the clear yet, but it is starting to break down. There is some selling volume that's moved into the S&P the last 3 days, and we'll see how it closes. It all matters on where the S&P closes. Because it's easy to sell down and look like things are going well now, but by the end of the day, for all you know, it could close way up above these highs. It can flip very quickly. So the closing price of the market is very key. So if it closes below the 5-period moving average, that'll be a good sign. If it closes below the 10-day, that'll be a really good sign that there's probably going to be some more follow through, and hopefully we'll start to see the downtrend take over. So that's what I'm seeing there. If we take a look at the 60-minute chart, just zoom out a little here, you can see the past couple days we had the news here with the Feds, the FOMC meeting. This run up here was the Obama meeting, and then yesterday we had a little bit of a blip, and then through the night it drifted up on this light volume, which is a very bearish sign, and then early this morning we've started to see some selling kick in. So hopefully we'll see some more selling follow through and continue to see some bearish flags form, and hopefully we'll see lower prices. So if we just take a quick look at the VIX, I mentioned this the other day. If we take a look at the just go to the daily chart for a minute, we've been kind of grinding bottom here for a while, and I wanted to see it uptick. Yesterday we did see an uptick in the VIX. It moved up a little bit. If I go to the 15-minute chart, this is each vertical line here is a day. So yesterday we had a nice run up, and now we've just pulled back in a nice bull flag manner, and we're pretty much trading back down at a support level. So I wouldn't be surprised if we see another wave of fear hit the market and push it up to these highs, hopefully break those highs, which means the market will go down lower. But this is a very bullish pattern on the VIX. So it clearly shows that there was fear in the morning, and then pretty much the rest of the day on light volume, people started to feel comfortable again that the selling had stopped, and they became more bullish, so it dropped back down. But I have a feeling we're going to see some more selling in the coming days, so this should continue to ramp higher. Anyways, that's it for now, and I'll talk to you guys later. Bye bye.